Have you ever been told or just had a sense that you had to wait at least 7 to 10 years after a bankruptcy before you can buy a home again? Or maybe you think that having a bankruptcy on your credit report will somehow make you not eligible for those low down payment programs. Here's the truth: it is not impossible to qualify for a home loan after a bankruptcy, even if it's been in the last 5 years. You can still qualify for those low down payment programs, and you can probably become a homeowner faster than you think. Let's dive into it. Now, before we talk about timelines on bankruptcies, I first want to get into the types of bankruptcies that we typically see on a credit report. And that is a Chapter 7, a Chapter 11, and a Chapter 13. A Chapter 7 is sometimes called a liquidation, and this is where most unsecured debts are discharged, and it's usually wrapped up within just several months, and it's like a reset button because there's no repayment plan. A Chapter 11 is typically used by businesses and self-employed individuals that have complex debt, and this helps them reorganize things and continue their operations using a court approved plan. Chapter 13 is known as the wage earner's bankruptcy. This allows debts to be combined and allows the borrower to keep their assets as long as their payments are being made. So it's possible to be a homeowner with a significant amount of debt that you need to pay off and restructure, but you don't want to refinance, or maybe you can't qualify because you're behind on payments, and you have equity in your home, but you don't want to sell it. So it is possible to be able to restructure those payments under a Chapter 13 bankruptcy. Of course, there's restrictions, requirements, and all those things that a bankruptcy attorney would help you with, but it's possible. Each chapter has their own impact on a credit report and how the lender will underwrite the loan, and the type of chapter will determine the waiting period that is required before you can qualify for a home loan again. There are a lot of mortgage programs available, and many of them have a bankruptcy waiting period. Today, I'm going to focus on the inside the box options. So, those are going to be the guidelines for conventional, FHA, and VA. However, as I've mentioned in other videos, we have outside the box options, or a non QM. A qualified mortgage is one that falls inside the box for conventional, FHA, and VA. I've taken really good notes to help give you the best info, so let's dive into those. Now, for conventional loans, these ones are backed by Fannie Mae and Freddie Mac, and what they like to see on a Chapter 7 or Chapter 11 is at least 4 years from the date that the bankruptcy was discharged or dismissed. It is possible to shorten that to 2 years if there are extenuating circumstances. Extenuating circumstances are things that were outside of the borrower's control in order to have that hardship occur in the past that then led to needing the bankruptcy. So, this would be something like a serious illness or injury, or maybe it was the death of the primary wage earner of the home at the time. It could have been a job loss or a company layoff, but only if it was involuntary and not due to any misconduct or quitting, and that caused a significant gap in the income. Another one would be divorce or separation, especially if it caused a measurable loss of income for the person that was left in the home. And then, of course, a major natural disaster. Now, for Chapter 13, they like to see 2 years from the discharge date, meaning that bankruptcy and the repayment plan was completed, or they want to see 4 years from the dismissal date. They will allow 2 years from the dismissal date, again, if we can prove it was an extenuating circumstance involved. But the reason there's that shorter waiting period on a discharged Chapter 13 bankruptcy of only 2 years is because they take into account that repayment period of that repayment plan as part of the waiting period. Now, it is possible to have multiple bankruptcies. And so if you've had multiple bankruptcies within a 7-year period, then that waiting period on conventional loans is going to be 5 years. It can be shortened down to 3 with extenuating circumstances. So again, It's not impossible. Now, sometimes we do see that a bankruptcy also then corresponds with a foreclosure, unfortunately. If the mortgage was included in the bankruptcy and then properly discharged, the clock starts from the date that the bankruptcy discharged, not on the foreclosure date that would likely happen in the future. And that can save years of waiting time. Now, let's move on to FHA. FHA guidelines typically are the most forgiving for buyers who are looking to purchase again after a bankruptcy. On a Chapter 7, you can become eligible after 2 years from the discharge date. On a Chapter 13, you actually don't have to wait until a discharge date in order to qualify. Once it's discharged, you do have to wait 2 years. So, if you're in a Chapter 13 bankruptcy and you've made 12 months on time payments to the court or the court approved trustee, you may qualify while you're still in your repayment plan. When qualifying during the repayment period of your Chapter 13 payment plan, there's 2 things to note. The payment plan that you're paying does become part of your debt to income ratio, just like any other debt would. And we also need to get court approval. So typically we see this approved for rate and term refinances and purchases. The flexibility of being in a repayment plan and combined with FHA's guidelines for that Chapter 13 bankruptcy makes it a really popular path back to homeownership for many of those who filed Chapter 13. Now let's move on to VA loans. And remember, VA loans are not just for veterans, but they're also for active duty service members as well as the surviving spouses. For Chapter 7 bankruptcies, generally they like to see at least 2 years after the discharge of that bankruptcy, but some lenders may consider 1 year as long as there's really strong recovery in the credit report and proof that the bankruptcy was beyond their control. So, something like a government shutdown that would cause our active military service member to not be paid but expected to show up to work, they still have bills. So, if they fell behind on their bills and that eventually caused them to then need a bankruptcy, that was something that was out of their control. With the Chapter 13, very similar to FHA's guidelines, you can apply for a VA loan after 12 months of making those on-time payments to the court or that approved trustee, even before the bankruptcy is discharged. Something that I've noticed with clients that I talk to that have had a bankruptcy is the impact that it has on them now, but then also once they're in the future and it was an event that happened in the past. And it kind of just sticks with them, and it's sometimes can be a cloud. And I hope that this video shows that it doesn't need to be, and it's more empowering and encouraging. Because while that is an event that did happen, and it is going to have a stamp on your credit history, it is temporary. And a lot of times, the negative things that happen on the credit report, once they are no longer negative and we have positive reporting happening after the event, now we're just in recovery mode. So with the Chapter 7, that bankruptcy is going to stay on your credit report for 10 years from the filing date, not from the discharge or the dismissal date. And a Chapter 13 is going to remain for 7 years. So while this is on the credit report, it's okay. The fact that the bankruptcy is reporting on the credit report does not automatically deny you from being able to qualify for a mortgage. The loan approval waiting period is completely separate from the credit report timeline. So, even if it's still listed on your credit report, you could still qualify for an FHA, a VA, or even a conventional loan once all of those seasoning periods that we talked about have passed. Now, regardless of the type of home loan program, the underwriter focuses on 4 main things. Number 1, recent payment history. They want to see at least 12 months of on-time payments. Number 2, reestablish credit. So even a few well-managed accounts can help you rebuild that trust. Even getting a small gas card, using that, paying it off monthly, over time, that positive reporting will definitely help. Number 3, having stable income and reserves. And it doesn't need to be a lot of reserves, but every little bit helps. But you just want to demonstrate that you have that capacity to pay your bills on time and be able to save just a little extra to live within your means. And number 4, a solid explanation. Just a short letter that described what caused the bankruptcy, how it was resolved, and why it won't happen again. A past bankruptcy doesn't define your financial future. With the right strategy, you can absolutely qualify for a new home loan. And sometimes it's sooner than you think. And you can take advantage of these low down payment programs that are designed for credit recovery. If you're coming out of bankruptcy, or maybe you have a lot of debt and you're thinking, oh my gosh, I want to buy a home, but I don't want to file bankruptcy because I don't want to hurt my chances. Sometimes filing bankruptcy, especially if you can get into that Chapter 13 plan, might actually be the solution that you need. But you need to find the path that fits your situation. And who better to talk to than a certified mortgage advisor who understands complex lending? Remember, the goal isn't to force your story into a loan, but it's to find the loan and the solution that fits your story. My name is Amber Jones, and I'm a certified mortgage advisor who's here to help inform you, empower you, and help you solve that financial obstacle that you are currently facing wherever you are at on your homeownership journey. I would love an opportunity to answer all your questions and address your concerns on a 15-minute phone call. And all of my contact information is below, where you can schedule that with me at a time and date that works best for you. I hope you found this information helpful today. And if you did, I would love it if you liked the video, subscribed, and then shared it with a friend. I hope you have an amazing rest of your day and now are feeling just a bit more encouraged. I'll see you again next time. Bye bye.